Hi guys, today I'm gonna share with you and compare the returns between equity versus gold versus debt. In this video, I will be sharing equity versus gold versus debt CAGR returns. The time period taken is 20 years, amount taken is rupees 10,000 per month, that is rupees 1,20,000 yearly. Debt instruments. Debt instruments provide you with regular interest payment at fixed rate along with principal repayment at the time of maturity. Types of debt instruments. Government bonds, debt mutual funds, debentures, fixed deposits. Debt instruments returns. In the span of last 20 years, the average return debt instruments has given a 7.2% annualized. So let's calculate our returns over a period of 20 years if we would have invested 10,000 per month, which is 1,20,000 per year. In the figure, as you can see, in year 1 we invested 1,20,000. The return was 8,640. So the total amount we earned in first year was 1,28,640. In the second year we invested 1,20,000 plus 1,28,640, which we had earned last year. And in the same manner we kept accumulating for 20 years. So as per above calculation, you would have rupees 53,90,272 at the end of 20 years, which is 225% CAGR, which means you will be a lakpati at the end of 20 years. Now let's talk about gold. Type of gold instruments: physical gold, gold ETF, sovereign gold bonds, gold mutual funds, digital gold. In the span of last 20 years, the average return gold instruments has given is 12.3% annualized. So let's calculate our returns over a period of 20 years if we would have invested 10,000 per month, which is 1,20,000 per year. So as you can see in the figure, we invested 1,20,000 first year. Our return on that was 14,760. So the total amount we had was 1,34,760. Second year we again invested our 1,20,000 plus 1,34,760, which we had earned last year, and we repeated this for 20 years. So as per above calculation, you would have rupees 1,53,778 at the end of 20 years, which is 419% CAGR, which means you will be a crorepati at the end of 20 years. Let's talk about equity instruments. Types of equity instruments: stocks, shares, आपको जो चाहिए आप बुला सकते हो. I'm just gonna talk about share buying or Nifty 50 index, which has 50 stocks in it. Cause equity means only shares or stocks, nothing else. Equity instrument returns. In the span of last 20 years, the average return equity instruments has given is 17.5% annualized. So let's calculate our returns over a period of 20 years if we would have invested 10,000 per month, which is 1,20,000 per year. So as you can see in the calculation, in year 1 we started with 1,20,000. The return was 21,000. So our total for that year was 1,41,000. Second year we invested our 1,20,000 plus 1,41,000, which we had earned, and we repeated this for 20 years. Equity instruments returns. So as per above calculation, you would have rupees 1,94,68,273 at the end of 20 years, which is 811% CAGR, which means you will be a crorepati at the end of 16 years and you will have approximately 2 crores at the end of 20 years. Let's take the summary of 20 years. So instrument equity, total investment rupees 24 lakhs over 20 years, CAGR 811%. Gold, same amount 24 lakhs, CAGR 419%. Debt, same amount 24 lakhs, CAGR 225%. चलिए अब इन्फ्लेशन का देखते हैं. Even if we take into account inflation, debt instruments will never be able to beat it. Gold will still manage to be above inflation. Equity will not only beat inflation but also give higher returns. So the choice is clear. No other instrument can beat the return of equity over a period of time. However, it's your money and you are wise enough to understand and make a choice of your own investment. If you are looking for guarantee, debt is the way. If you are looking for steady growth with safety, gold is the way. However, if you are systematic and choose your stocks wisely, even risk or market crash won't bother you. Cause as the saying goes, चाहे आदमी हो या स्टॉक, जाना तो ऊपर ही है. Easier said than done. अब आप ये बोल सकते हैं कि ये सब बोलना आसान है, करना नहीं. अब लेट हो गया है, अब क्या करूं? I agree कि शायद लेट हुआ है, ये दिखने में अच्छा है, but trust me people, this is the only way to make huge money in market. मैंने भी लेट शुरू किया, but now it's been 6 years and I'm just investing in. Probably in my early 50s I'll hit my crore. सबसे important चीज़ है शुरू कर. चाहे आप 30 के हों या 35 के हों या 40 के हैं या 46 के हैं, just start. Time leverage. And for those जिनके बच्चे हैं, inculcate the right investing habit in them. No sooner they turn 18, उनको सबसे बड़ा गिफ्ट दीजिए in form of demat account and invest in their account till they start earning. Just imagine they will start at 18, probably find their crores when they just turn 38. Stay tuned, as in my next video I would be talking about how to choose stocks for long term. Bye bye, take care.